To the 24th of May's report. Right, news events. Today, I like to talk about what is the latest Fed rate decision, based on the minutes that was released during the midweek. Okay, so in the latest FOMC meeting on May 1st, not May 1st, sorry, this date, correction, my God. How they are going to put May 1st? I think there's a typo there, right? The latest FOMC meeting, okay, this, let me correct. Okay, correct it. In the latest FOMC meeting, some US Federal Reserve officials signal their readiness to raise interest rates further if inflation continues to escalate, right? So the meeting participants acknowledged that inflation has been more persistent than expected at the start of 2024. Recently, monthly data showed significant increases in both goods and services price inflation, largely attributed to ongoing geopolitical events. You all know what's happening already of late, right? With the two wars that's going on. So since the meeting, several Fed officials, including Chair Jerome Powell and Governor Christopher Waller, have expressed skepticism about the necessity of a rate hike. They indicated that any decision to hike would be contingent upon appropriate economic conditions. Only when I write here economic conditions here, I am actually referring to the inflation. If inflation really goes out of hand. Okay, so we have seen inflation from 9% at the high 9%, it came down. It's just only proving a bit sticky at the current levels. But due to the conditions, the prevailing conditions like geopolitical, as mentioned, and also the strong US economy. So, but it's not to a point where it's alarming that the Fed needs to hike its rate. Okay. So Powell's cautious stance is understandable given recent developments in consumer health. They need to be very careful, and not simply just say I want to hike, I hike, but because there's one particular part which I've dwelt upon, a topic we have dwelt on in previous report, that is the consumer's health. You remember, if you all remember the what we call the loan delinquency rate and so on, right? So that particular area. So what's happening right now is consumer surveys indicate increasing financial strain, particularly among low and moderate income households. There's a notable rise in credit card and buy now, pay later service usage, along with increased delinquency rates for some of the consumer loans. So it is coming to a point where it's a bit worrying for Powell as well. So these consumer level issues are concerning for President Biden as well, especially with presidential elections at the end of the year. So US voters have consistently expressed dissatisfaction with Biden's handling of the economy, despite a strong stock market and robust labor conditions. His rival, Republican Donald Trump, has capitalized on the higher cost of living as a key campaign issue, emphasizing the impact of higher Fed rates on mortgage and borrowing costs. This is also why President Joe Biden said he stands by his prediction that the Federal Reserve would cut rates by the end of this year, despite a new report showing stubbornly high inflation back in April, right? But he has already said, yeah, we are going to cut. It's just, he's basically trying to preempt. Now, the Fed has already mentioned they do not want to be part of the politics, but it's not that easy. It's not straightforward as it seems. Both presidents are looking into reducing the living costs in the US, but if you were to force rates to come down prematurely, inflation could rear again its ugly head, and that will create more trouble for the US economy, right? So markets are currently pricing in 1 or 2 rate cuts by the end of 2024. That's down from 3 as of Thursday afternoon. when I was writing this report, futures pricing indicated a 59.9% chance of the first reduction occurring in September right now. Okay, so this is the development so far that we've seen from the report. More definitely is to come. Like I mentioned earlier, there's still one more CPI to come before the next FOMC meeting, and that will give a clearer indication, what's the supposed next step taken by the Fed. Okay, so stay tuned for that. And with that, that's the end of the report for today.